While the S&P 500 surged more than 3% on Wall Street overnight, the technology-based Nasdaq catapulted 4.4% higher. It means it's now 22.5% above its low point in early April, now entering a bull market. But some experts warn uncertainty persists.
On Wall Street, cheers and fading fears. Shares rallying sharply in response to the tariff deal struck between the world's two largest economies. The US and China yesterday agreeing to temporarily slash tariffs for 90 days.
I think it's going to be fantastic for China. I think it's going to be fantastic for us. And I think it's going to be great for unification and peace.
President Trump says he'll likely speak with Xi Jinping at the end of the week. In a tangible sign of the trade truce taking hold, there are reports China has removed a month-long ban on its airlines taking delivery of Boeing aircraft. However, the Chinese leader today made a thinly veiled swipe at the US, condemning what he called bullying. Analysts say the road ahead is anything but smooth.
We've gone from okay to apocalyptic to sort of merely bad. It's a tariff that at least has a certain degree of flexibility and will allow life to go on, albeit at higher prices and maybe with greater uncertainty and delays.
While American businesses reliant on Chinese goods reacted with measured relief.
It kind of feels a little bit like we dodged a hurricane. We didn't get free of the wind and the rain, but so far we've dodged major impact. And our hope is from here is the 30% will maybe go down to 10% or less.
European markets were similarly buoyant.
Die Börsen sind mit einem Paukenschlag in die neue Woche gestartet. Der DAX hat ein neues Allzeithoch aufgestellt, kurz nach der Eröffnung. Grund hier ist die Hoffnung auf einen dauerhaften.
But Asia-Pacific markets traded mixed today following those surges. At home, the improved trading outlook was given a cautious welcome.
We also need to recognise that there's still a lot of uncertainty, there's still a lot of volatility in the global economy that we all have to deal with, and a lot of that volatility is still unresolved.
Rochelle Harrison-Pless, SBS World News.
And the response from Australian investors was a little more muted, with the ASX 200 up 0.4% to an 11-week high. It means it's up 12.7% from the low point reached in April, but is still below the February record high.
It's a really interesting relationship because if you look over a 5-year period, traditionally the US has always outperformed on the upside to us. But conversely, when we had that sell-off last month, the ASX held up relatively well compared to the US. So we're just seeing a bit of reversal in that. And the major cause of that is the composition of our index, right? So in the US, we have a lot more tech stocks, a lot more growth stocks, whereas in Australia, we're much more mining and bank focused. So, when the market was selling off, we saw a bit more resilience in the Aussie markets.
Winners include medical device maker PolyNovo following positive testing results. Pharma stocks recovered some of yesterday's losses. Ampol climbed. It sold its retail electricity business in Australia and New Zealand to focus on rolling out more electric vehicle charging stations. And energy stocks did well. That's as the oil price recovered following those US-China trade talks. But of the 11 sectors on the ASX, it was tech that did best, led by location app maker Life360. Consumer staples the worst, while gold producers dominated the bottom of the 200 because the global gold price took a bit of a hit, down around 0.6% on this time yesterday. The Australian dollar is down, edging closer to 64 US cents, but is stronger against most of the other major global currencies. And there's been a small rise in consumer confidence following a recovery in financial markets, lower petrol prices and a clear-cut election result. The Westpac Melbourne Institute Consumer Sentiment Index rose 2.2% to a level of 90.1. However, anything below 100 suggests pessimists outnumber optimists. While consumers are a little less downbeat on spending, the outlook for family finances deteriorated.
For the RBA, they're sitting on a significant downgrade to their expectations for domestic consumption when it comes to their next meeting. If you couple that with what is essentially a benign inflation update for the March quarter, We think there's scope to ease policy in May by 25 basis points, we think. And in fact, it's appropriate that policy is less restrictive, particularly given we do have significant uncertainty around the global backdrop.
NAB's business survey, meanwhile, showed conditions eased slightly in April, driven by weaker profitability as businesses look to invest less on equipment. Janice, more data tomorrow from the ABS wages data. It'll help the RBA make a decision on rates.